technical difficulties, no big deal. Technology always gets the best of all of us. So my name is Alice Epstein. I am today's panel moderator, and it's my honor to introduce Paula Sullivan, Managing Director with Marsh, and Dan Nash, Executive Vice President with Hub International. Before we get started, I just want to say I hope to see all of you at the Crittenden Conference, the Crittenden Medical Liability Insurance Conference, scheduled for April 12th through 14 in Nashville. Hopefully, all of you will be there. So now to today's panel. After much discussion, this panel has been titled Key Industry Elements Required to Meet the Evolving Needs of the Healthcare Insured. Both Paula and Dan are leading brokers in the healthcare industry. As we all know, it's the broker's responsibility to represent the customer and or client, in this case, a person and or a healthcare organization that provides healthcare. And their business, the business of the broker, is to maintain that client. And they do it with everybody else's help. Brokers play a valuable role in connecting buyers and their needs with insurers. So let's get started. Paula, if I can ask you to start, what is it that you actually look for in a healthcare liability carrier to meet their needs and the needs of the broker representing them? Paula?
So probably the most important element of a carrier or insurer relationship in my mind is the financial strength and long-term viability. And that's of particular importance in medical professional liability because it's such a long tail line of business. So, insurance is a promise to pay. And we need insurance companies that are going to be around by the time the claim comes due. In particular, in the last 3 years, I guess now, since the beginning of 2019, we have seen 11 markets exit this space. Well, in particular, the hospital professional liability space. And while we've seen 9 roughly new entrances, the capacity that we've seen, kind of disappear essentially, hasn't returned to the full level since these entrances have come. So being around to pay claims when they come due in this long tail line, I think, or the financial strength is number one for me. Another very important, I think, element as I look to, recommend a carrier partner to my clients is underwriter experience. So, while we see some new markets in this industry, it's wonderful that they have some unencumbered surplus and, are able to be more competitively priced and offer broad terms. I think, the key is really having underwriters who understand the market, understand the subsectors, and also the venues, right? So medical professional liability is very venue driven, and to enter a specific region or subsector is having experience and understanding that risk is keenly important.
Thank you, Paula. Very insightful. Dan, if we can turn to you now. When evaluating the carrier's offerings, what makes a difference to the broker and therefore what should make a difference to the client?
Yeah. Thanks, Al. So what I would say is I would dovetail on some of the things Paula had said. So I think she's spot on with some of those comments. The other things too I look for is, the responsiveness. And sometimes it can be a little frustrating. If you put in a good submission, you get it into market 60 to 90 or sometimes 120 days in advance, depending on maybe you have some issues with a particular client. But their responsiveness and the work, are they engaged in the process? I guess I'm sometimes a little old school. A phone call every now and again is good instead of emailing back and forth, and, get on the phone and have a conversation, understand the risk. And I feel sometimes we get and brokers and carriers get caught up in the data sometimes. And I know you have to have data to make a decision, but you also have to understand where you're going with it, where the client is going, what their view is this year and in the coming years. So having a good understanding from the underwriter, what they like to do, how they operate, to Paula's, as Paula's comment, having someone with the experience, but also looked at the other parts of the of insurance care, what they're offering, and depending on what the client needs. There's other elements like the claims people. For a big account, a lot of time, that's where the rubber meets the road with the claims. So I look for the carriers to bring their claims people who's going to, not just their manager necessarily, but who's the person that's going to actually handle the claim when it comes in, and then they connect with that customer, because that's some of the most important things. We can negotiate the deal up front, but what happens afterwards in managing that claim can make or break your relationship with the carrier and the client if the thing isn't managed properly. And then the risk element of it as well. And a lot of companies offer risk services. Not all carriers or not all clients take advantage of that, which I think sometimes they should. I think there's some trepidation about, well, if I tell the risk manager this, then it's going to affect my pricing, which doesn't happen, believe me, because I was a underwriter for 15 years. So that's not how we look at it. But anyone who wants to engage in that can make the difference all in the world. So the claims and risk and underwriting knowledge are big elements for me, Alice.
Well, thank you. And Paula, along those exact lines, in your experience, what do you feel the clients benefit the most from? And on the other side of that, what services offered by a carrier do they benefit the least from? And the big question at the end is there something missing?
So importance of claims experience management, I think, is key, to dovetail off of Dan's point. In terms of offering, I'm getting a sense you're talking about risk and claims and other things, but I think, maybe to back up a little bit, I think the key is the offering of an insurance product, right? So I think the broad, consistent coverage is of the utmost important, right? That's what you're purchasing essentially. And then being able to tailor that coverage to meet an individual client's risk profile is, I guess, kind of the key. Again, dovetailing off of Dan's comments, I think, claims expertise is of the utmost importance. Risk management, clinical risk management, I think, is another important offering that we're not seeing as much. I think a lot of carriers have kind of cut back and offered, perhaps reimbursements or other allowances from a clinical standpoint, where in the past they used to have kind of the brick and mortar of personnel being willing to help. And I think it's important in today's environment because with the staffing shortages and with the really low margins our healthcare clients have, they don't have necessarily the resources in that clinical risk space that they did before. So I think that's a really important additional product offering that we're not seeing as frequently, but that can be a big necessity or a really nice additional resource for our clients.
Thank you. Dan, along with some of Paula's earlier comments about stability and coverage and the need for some of the policy issues, what do you see? Have you seen in your experience right now the current healthcare industry carriers' interest in cross-selling, whether it be professional and general, property and cyber, versus just a standalone policy? Should that make any difference to the buyer?
Well, if it's to their financial benefit, absolutely. I mean, one of the things when I was in charge of one of the underwriting companies, where I think we were one of the few companies at that time was offering professional liability, property, and work comp and auto in one offering. So it was called, what I called it, the whole account view. And so there was opportunity then for us to cross-sell. Sometimes each of those lines of business were with different brokers, so it made it a little more challenging. But I think there's some value that can be had out of that. Unfortunately, a lot of carriers do not do that because when you think about how carriers operate, their P&L, their profit and loss statement is basically by line of business. And I think if we can move forward, that's where I'd like to see if we move forward in the process, then carriers could probably make some more money. Customers would have a better view of their risk overall in a holistic way. And I think there'd be some synergy that they would get out of that, both from a pricing and a risk standpoint. So I'd like to see more of that offering out there, but you don't see it very much. I mean, every carrier talks about it. I've been around this business a great deal of time. I don't want to say I'm old. I'm saying experienced. But I haven't seen many carriers wanting to do that. They talk about it, but the execution isn't quite there.
And Paula, your opinion on bundling versus standalone?
Well, I mean, to Dan's point, I think it's important to have a diversified book of business, to be able to weather the market cycles. And it's also important to understand your client really well, right? So if you can understand the risk factors from the medical professional space and how it might be impacted, for example, cyber or, property, I think it's twofold, right? So the client becomes stickier to the insured and you ensure a longer term relationship, but also I think you have a better understanding of your client's risk profile if you're able to underwrite and provide insurance for multiple product lines.
So clearly both the carrier and the broker needs to understand the client, needs to know what they do for a living, understand the risks, understand the services, more so than just submitting an application and reviewing an application that has the number of procedures, the number of beds. It's the importance of knowing what those procedures are, what the risks, the hazards are, the alternatives, and what those beds represent. Am I getting that right?
Yes.
I think so, yeah.
All right. Okay. Dan, I'm going to move back to you for a moment because we've talked about this quite a bit. And Paula, I want to get your insight after Dan. What's the importance of insurance data, predictive modeling, analytics consultation? I know it's what the industry talks about a lot right now. Is it meaningful? Does it matter?
In this world of, I'm glad you brought this up, Al. So it's in the world of big data, right? I mean, that was the big buzzword. They got big data. Everyone's got big data. But how do you analyze the data and how you look at it? You try to, a lot of clients, and I know Paul and I both run in this and others have as well, looking for a benchmark against their competitors. The problem with some of that benchmarking and analytics is, if you've seen one hospital, you've seen one hospital, right? Because some have a senior care component to it, others don't. Others have some things tied with ambulatory surgery centers. So it kind of all depends. But like anything, data analytics today, it's getting better and better. You look at some of the independent actuaries, there's some great firms out there doing some different things. That thing's very impactful. We have our own data analytics firm, or operation, I should say. And to me, I would describe it as, you're trying to do something with a client, and you need to have data. So what I would describe it as, if, prescription without analysis is malpractice. So we do a score modeling, what we call the stochastic cost of risk evaluation. And it's taken the client's data and compare it in the marketplace, not only on their own risks, so we can have an idea what our loss costs are going to be compared to the marketplace. And also we can provide some benchmarking limit you might want to buy or what you're considering. So you have to have those analytics today because these risks are much more complicated than in the past. Before, it used to be a doctor, he or she would be out on their own, have a shingle somewhere, and a hospital would be just a hospital, but it's not the same anymore. It's, as everything kind of merges together and becomes more of a conglomerate, you have to have some analytics to understand what the client really has in terms of the risk, and so that you can share that kind of data with the market. Because like any carrier, right, it's Paul and I will certainly talk to the underwriters, and we meet with the claims manager and claims people and the risk folks, and then ultimately sometimes or every time the actuary at the insurance carrier has a statement in there. So as I've learned talking to actuaries over the years, I forget which one who told me this, 1 + 1 doesn't always equal 2. I'm still struggling with that one, but
Sylvain Dion.
yeah, thank you. So, but that's the part. You got to have the data and analyze the data so you can make recommendations to your customer and client. Say, yeah, look, based on your losses in this, here's probably a good attachment point. You know, and they get captives and other things, alternative risk transfer, but I don't think we have enough time to get into that. But that's kind of how I look at data. I kind of went off on a tangent there, else, I think. So I'm sorry if I didn't.
No, it's great. And actually, Dan, it brings up another question that to be fair to my panel, you haven't seen before. But what I see with healthcare entities is that they're continually evolving. The services that were in the form are not necessarily what they're doing 6 months down the road, 9 months down the road, or even the day after the submission's been submitted. So Paula, talk to us a little bit about the evolving nature of a healthcare insured, what the broker expects to do from and expects from the healthcare insured, and then what the carrier or the risk financing group should expect in response and how to respond.
So I think your question is, how do we understand our client's unique risk profile, particularly as it continues to evolve, right? They're picking up more risk. They're treating patients differently. Is that your question?
Correct. And now all of a sudden tomorrow they plan on bringing in a whole new specialty of services, something that was never, in their submission, but they have the opportunity now to see revenue from a new direction. And the very nature of the insured has evolved, changed, been altered somewhat.
Yeah,
what do we do mid-policy with that?
I think it's all about communication, and I think brokerage is a 24/7 job because our clients are always working, right? They're always delivering healthcare. Hospitals so close. So we talk to our clients every day. We have our busy period during the renewal cycle when we're gathering information and when we're negotiating terms. But I think we talk to our clients every day because they have questions about exposure and risk that they understand the financial impact of. And, officially that process starts with our renewal strategy meeting, which is, 5 to 6 months out of renewal. Again, this cycle never ends, but, we talk very in depth about what's changing at their organization short and long term, and how that could impact potential claims, potential risk, and does the coverage that they have in place or that we are, processing cover all. And I think, again, the key is really communication. So, whether, for example, a big issue right now is telemedicine, and what states are you practicing and where are your providers licensed, and what type of joint ventures do you have in place, and, does the coverage in place, is it adequate? Do you want to shift some of that liability, and how are you doing it by contract? And again, how does your policy in place respond? So I think it's really the key is communication, talking to your clients frequently, understanding some of these emerging risks, which maybe they don't see as risks. To your point, they see as new revenue streams, and how does that impact the coverage that we place?
Well, thank you. And Dan, taking off of what Paula just said, putting on your broker's hat, when you as the broker, when HUB becomes aware of these changes in the nature of the insured, what does the broker expect, or what should the broker be expecting from the carrier?
I think I would expect them to be flexible in those kinds of terms, unless, suddenly if, a health system has a gun manufacturer, that's a little different story, but that generally doesn't happen. But I think Paula is spot on. It's about communication constantly with your customer, understanding what their strategy is today, tomorrow, 1 year, 3 year, 5 years out, if you can get that kind of information. And then when then you want to have meetings with your carrier, certainly the lead and first access, you want to have those meetings and have the client there and explain what they're thinking about in their business, so they can be sort of aware of what might be coming in the forefront. Sometimes they don't even know. I mean, I've had situations both as a broker and or carrier where the client says, oh, by the way, we forgot to tell you, we bought this big building 90 days ago, and can you get it covered? And by the way, we just had a loss. So that's why it's so important, as Paul said, to have constant communication with your customers, so you're aware of all these things. But sometimes the risk management folks are the last people to know sometimes. So that's why you got to be talking to a lot of different people in the organization.
Mm-hmm. Yeah, I think that's a good point, Dan, too. And, you need to get to know your insurers or reinsurers as a client. And, we push very hard having, face-to-face meetings now as much as possible. And, whether it's a tour of your facility or a trip to London, I think having that relationship and understanding with your insurance partners is going to be the key, whether it's a new emerging risk that we need to find coverage for or a unexpected claim.
Thank you. It all makes sense. And I guess what I'm hearing is the need for flexibility. The evolving nature of healthcare is that these clients will change. They may be steadfast in what they've done for 10, 20 years, and all of a sudden there's a new player. They have something else that's important to them. And both the broker and the carrier need to be responsive to that. I'm going to open this next question to both Paula and Dan and leave it up to you two. What are your observations regarding growth in the market over the last couple of years? And where do you see it headed? Somebody meant, maybe Paula, it was you early on in the presentation, or maybe it was Dan, about the number of carriers who have come into the business and gone out of the business. Where do you see it going from here? What should we expect? Paula, Dan, whoever wants to be up first.
You want to arm wrestle over this, Paula? You want me to give it a shot first?
Go for it.
All right. So I guess, Alice, is the question really what's happening with the carriers or what's happening with the customers?
What's happening with, let's take it both directions. That's an excellent point. So let's first take it with what's happening to the customers. Okay.
Well, the customers, it's very different, right? So all the stuff going on with healthcare, and it's as I like to say in a lot of things, it's an evolution, not a revolution. They're trying to find ways in the new way of healthcare, right? So you look at some of the biggest health systems; they continue to acquire bigger other operations across the country. Even you're seeing operations come together in different states. You're seeing much more physicians being acquired by a lot of the hospitals, physician practices, and you look at the physician-owned insurance carriers; they lost 25% market share to the hospitals where they insure them in their program, whether it's a captive or some other arrangement. And so you're seeing a consolidation, I would say, and across from a horizontal perspective. So you're seeing bigger risks out there, but then again, at the same time, because there's opportunities for healthcare entities to make money, you're finding a lot of these healthcare tech startups, trying to get legs in there, and then some of them are getting some traction, which is interesting to watch. But you see a lot of the stuff too kind of come out of the hospitals too, from everything used to be in the hospital. Right now it's a little more effective, and an ambulatory surgery center with knee replacements and other things, they're happening everywhere. So it's changing, it's dynamic. I'm not sure where it'll settle. You go back to the 90s when things happened, everything kind of came back to the hospital, then it came out, now it's coming back in. But I think the cost of healthcare today and medical inflation and regular inflation, it's hard for small healthcare businesses to start. So that's why I think you're going to see more consolidation or these things getting bigger, not smaller.
Yeah, I agree for sure. So the client base is changing, and at the same time, the insurers are facing significant headwinds. I just read this morning, AM Best released their property and casualty market report, continued negative outlook for the P&C industry, and medical professional liability specifically, continued negative results now 8 years in a row. And that's expected to continue, unfortunately, due to rising claim severity in the healthcare industry, social inflation, higher reinsurance costs, and then to Dan's point, financial inflation is going to have a significant impact on the markets or the insurance companies. So while rising interest rates might have a short-term positive impact on investment rates, it is, estimated that the ultimate result will be negative just due to the continued rising loss costs. And then I guess just to conclude, I'd say, the other factor impacting the insurance industry are the persistent challenges of tort reform. So, while we've seen a little bit of a positive reform or, steadiness, for the most part, I think we're seeing challenges around the country that could continue to drive loss costs and severity claims upward. Pennsylvania venue shopping, MICRA, the escalator that was passed late last year. So I just think, there's a lot of challenges our industry is facing.
Which brings me to an all-encompassing question for both of you. We're seeing a lot of these changes. All of us on the panel have been doing this for many years. We'll say decades, but many years. And I feel as though, as moderator, we've been having some of these same discussions for many years. What is it going to take to improve the insurer, broker, insured relationships to make it more efficient? What are the next steps that you as brokers are looking for, are hoping for from the risk financing organizations? Either one. Dan?
There's a few things I'm looking for from the carrier side of things where it's, you would expect, back to my statement of evolution and revolution, but at this point I'm ready for the revolution, frankly. So I think about even some of the simplest things in our business, billing and billing issues and other things, documentation back and forth with the carrier. I feel like I'm back in the 70s. I tell you, two companies are very large international companies. So I had it with one program. They are still doing coupons for billing. So maybe some people on the phone don't want to, who are too young, don't know what a coupon is. But you used to get when you had a mortgage, you used to get a coupon book and you tear it out each month. I had a client that was still doing that with a carrier. I thought, what year is it? And another one, very large, it writes med mal in this space, but this is on a work comp issue. They can only send bills via fax. It's mind-boggling. Now, and then you go in these underwriting meetings and you talk about the carriers, let's say, face it, our clients, the clients have the problems too. I mean, we're still talking about this 30 years later. We still have documentation issues and how to document something. That's maddening. But then again, the carriers have known about a lot of this, all these problems over the years. We're still doing applications, filling out names and addresses when you can Google it, most of that stuff. And we've got to move beyond that to make this thing a little easier, because let's say, I'm fortunate enough to steal one of Paula's accounts. So, and I, as a BOR.
Not happening.
No, I know it's not happening, Paul, but, let's just say it imaginarily, okay? Let's say that happens, okay? Oh, all right, I'll steal from Ann, never mind. So anyway, take that account, but then the carrier says, well, I can't share any information. There's the work product from the previous broker. Now, I get it, whatever they might have done in terms of that, but in terms of the information about, for instance, how old the building is and what kind of, construction is it, not to share that information is frankly asinine. It's just some of these things, it's just so frustrating we can't move forward. And the insurance carriers have a lot more profit margin than these healthcare systems. They're always, we go to these meetings, they're yelling at them, why aren't you using origami or some type of RMIS system to manage all this? And we're still doing paper documentation with them. So it's frustrating that the carriers and even some of the brokers like us, there's still stuff we do that needs to be improved and advanced. And the financial services sector seems to be the last one embracing technology, But I get from the carriers, so I don't mean to ramble on here, but I know working at the carriers before, when carriers are acquiring one other carrier and everyone has a different system, to try to get it on the one portal is challenging. But at some point, my God, we got to move forward.
Yeah, those are some really, really good points, Dan. And how about when you have a client that's been with the same carrier for a decade or two, and they're still asking for the same application to be signed year over year?
Because someone's got to check a box, right? So it's frustrating.
Yeah.
So Paula, let me ask you then, what is it that, let's do the how can brokers encourage growth and evolution, ease of service in the market? What is it that for the carrier should be expecting from the broker? We've talked a lot about what the broker expects from the carrier, but let's vice versa that for a moment. What should the carrier expect from the broker?
That's a good question. I think they should expect transparency.
Okay.
We finally got to the stage where, it's more commonplace, and I think to be as transparent and as, creates, endless efficiencies for all of us. I think they should be more understanding, to Dan's point, of the data that we're able to obtain. We're talking about staffing shortages in the healthcare industry and very thin to negative margins. I think that they should be able to, kind of better understand the data points that are most necessary to underwrite and work from that.
Okay, thank you. We're coming close to the end, but I want to give both of you the opportunity for final thoughts. Anything that you want to share with our listening audience? Let's go to Paula first, ladies before gentlemen.
Well, I look forward to seeing everybody at Crittenden in Nashville. Lots of great topics to be discussed. I think that while, we mentioned a few things like the market profitability, claim severity being difficult issues for our industry, I think overarching, we still have a very vibrant and active community of underwriters and brokers, and I look forward to seeing everybody and working with you closely.
Thank you. And Dan, final thoughts?
I too look forward to seeing everyone in Nashville, and hopefully the weather will be a little nicer than it has been. Although it's been a pretty mild winter in Chicago, so I'm not going to complain about that. But I think there's some opportunities for all of us with our customers to look at things and push our carrier partners. To me, and there's not enough time to go into this, but I would push the carriers to look at alternative financing options. Everyone looks at an annual basis and how they make their money each year. And I get they have to make money. They're in the business of making money. But you have to think more strategically and long-term with your client partners, and thinking about multi-year policies and some other ways to underwrite it that makes sense to give you some long-term profitability. And just the last thing I want to say is that I see somebody had a question there. What's the MPL combined ratio for 2022? I believe it was for the 100, and Paula may know this better than I do, I believe it was 109%, 109 combined ratio for the top 10 med mail carriers. I think overall for the industry is 118 or 119. So it's not a great number. So you should be expecting rate on some of your risks, and then try to negotiate the best you can based on loss history, et cetera. So I look forward to talking to everyone there, and I think there's some great opportunity here and for change. So hopefully everyone tries to embrace it and make these change happen.
Thank you both, Paula and Dan. I think what I'm left with is really, I heard the word partner used multiple times. And I think we have to think of ourselves not as, who's our customer, who's our client, but that we're all partners. And we really are all in this together. We're all going to succeed or we're not going to succeed based on our partnerships. So my final thoughts are, I want to let everybody know that the webinar has been recorded. And if you attended, you will be receiving an email with the recording link sometime after the webinar. I don't know exactly when, but you will. And I also look forward to meeting each of you in Nashville. Remember, we're talking about April 12th through 14th. Hopefully you've already registered, but if you haven't, it's not too late. Please do. And we're going to have a very comprehensive, I think, symposium. We have lots of panels. It will be 2.5 full days, lots of opportunity to meet and greet, lots of opportunity to spend time with and network with your colleagues and those who, as panelists, participate, and the moderators. So again, I thank all of you for joining us. Looking forward to Nashville. I'm supposed to say yeehaw, so I said it.
Way to go, Alice. Yeehaw!
Thank you, Dan and Paula. One yeehaw?
Yeah.
Okay. So thanks to everybody for joining us.
Thanks, Alice.
We'll see you soon. Have a good one.
Bye-bye.
Bye-bye.